high-yielding cash-flowing stocks or ETFs can be looked at as the best instantaneous cash-flowing vehicles that can lead dividend income-focused investors to success in almost no time at all. But the problem is with most higher-yielding stocks and ETFs, they often come along with some negative aspects also. Whether it's the long-term share price decay or a high dividend payouts that is at risk of being cut in the future, high-yield starting assets can be tempting but also quite risky. But what if I told you there's a high-yielding ETF that has a unique strategy and actually has an impressive track record so far? Well, stay tuned until the end of this video because we're going to go over an ETF that offers exactly that and more. Now, we're going to go through all this today. Right over to you, please drop a like in this video and subscribe for more content like this. Now, if you're into dividend investing, I'm sure you've heard about this new ETF that pretty much everyone's talking about. It's ticker symbol SVOL, or the Simplified Volatility Premium ETF. Now, the SVOL is an exchange-traded fund launched and managed by Simplified Asset Management. It invests in public equities and fixed income markets in the United States. For the equity portion of the fund invests directly in through derivatives in stocks and companies operating across a diversified sector. It employs short strategy and uses derivatives such as futures and options to create its portfolio. The SVOL ETF invests in growth and value stocks of companies across diversified market capitalization. For its fixed income portion, it invests in high-quality short-term debt securities. Now, SVOL was formed on May 12th of 2021, so it doesn't necessarily have that long of a track record yet. So not to get too technical, but SVOL works on a short-term volatility strategy where it sells futures on the VIX volatility index and aims to generate a lot of income from doing so. Now, real briefly, for those that are new to this fund, the SVOL ETF seeks to provide investment returns that correspond to 0.2x to 0.3x the inverse of the S&P 500 VIX short-term futures index, while owning tail hedge for extreme events. Now, SVOL's portfolio is fairly easy to understand. It is short around 20 to 30% of VIX short-term futures, while owning treasury bills to generate additional yield on idle cash. And it spends about 2 to 4% a year on tail hedges to protect against black swan events or simply put massive swings to either direction. Investors should also note that SVOL ETF may occasionally change up its portfolio by buying short-term corporate bonds or hedging with calls on other instruments like the ProShares Ultra VIX Short-Term Future ETF or UVXY. Now, to learn a little bit more about SVOL, let's head over to the Simplify ETF website. The fund overview says it has a gross expense ratio of around 0.66%, which is definitely on the higher end, but for an actively managed fund like this, that's not all that surprising. The total assets are around $334 million as of right now. The distribution frequency, which we are going to go over later, is monthly. And the distribution yield as a last is around 17%, which is incredible. Now, SVOL is definitely on the riskier ends, in my opinion, of ETFs. That has been on my radar for a while now, but I haven't purchased too much of it as of yet because I want to see how it performs a little bit longer. The fund was started in 2021, and so far since inception, the ETF is down as far as price, around 9.4%. Now, we talked a little bit earlier about the holdings of the fund, but to see the latest top holdings on the screen, we have the United States Treasury bills at around 13%, Simplified Volatility Premium K at 32%, December 2023 at 7%, the 2024s at 7%, and then T-bills at 0.75%. There's only 6 holdings in this fund. So although the strategy to newer investors might seem sort of complex, it's actually pretty simple. Now let's cut right to the chase. The main reason on why a lot of us more dividend income focused investors are even interested into a fund like this is of course because the massive dividend distribution on a monthly basis. So the trailing 12-month dividend yield is around 16.83%. And I know you're saying that seems absolutely outlandish and there's no way that a fund can consistently pay this high of a dividend without having massive share price decay on top of that. But so far year to date, SVOL is actually up around 5.39%. And I say that surprisingly because funds that normally pay well north of 10% as far as yearly dividend yield, normally these funds decay in price quite a bit. But looking a little bit deeper into SVOL, over the last year or so, the dividends have actually been rather consistent. Since the beginning of this year, SVOL has paid around 32 cents every single month over the last 6 or so months. And if we zoom out a little bit back, there has been months where SVOL has paid more. There's been special dividends where they've paid a little bit higher to 39 cents on a monthly basis. But overall, around 32 to 33 cents per month is where this fund has been at pretty consistently. Now, I'm also sort of surprised by this because of all the mixed volatility that we've had over the past year now, and even with the VIX absolutely collapsing year to date. The VIX is down 36.56%. But because SVOL has a mixed strategy and shorts the VIX, this ETF has done shockingly well over the last year. Now, we don't need to go over the exact math, we could always save that for a different video. But with an ETF yielding around 16% or 17% trailing 12 months, and with an expected amount of around 32 cents per share per month moving forward, at least if we were to go off of what the fund has done historically, let's just say, investors with a relatively small amount of money, in theory, could buy up shares of this fund and have the monthly distribution cover an entire bill, or investors with a little bit more money potentially could even retire off of an ETF like this with once again a way smaller portfolio than that you would need to retire off of a fund like SCHD, for example, that yields around 3.55%. Now, maybe the most interesting way to look at how this fund has performed on multiple different time frames is to look at the total return, which is the dividend and the actual fund's price appreciation included. So if we look at SVOL year to date, it has performed quite well, even next to the S&P 500's massive year of 18.13%. SVOL has returned, as far as total return goes, 14.58% year to date. On the last year time frame, SVOL is crushing the S&P 500 at 22.56% return, where SPY's returned 17.04%. And over the last 3 years, which keep in mind SVOL has not even been around for 3 years, so this isn't really fair to go off of, but as you can see, it's pretty much tracked the same path as S&P 500, and once again on certain time frames, it's done very, very well. So moving forward, where does this leave SVOL, the Simplified Volatility Premium ETF? And is this an ETF that I personally, being a more income-focused, dividend-focused investor, will be purchasing? I personally am interested in buying some shares of SVOL moving forward here. And simply put, this is because of the track record that the ETF has had as of this far. The ETF has proved to do pretty well in multiple different market conditions, and the monthly distribution as of this far has been very, very impressive. On top of that, the ETF's price has not decayed substantially, which is my biggest pet peeve of super high yielding ETFs or stocks. Most of the time when they're distributing north of 10%, you're going to see the price decay significantly. But honestly, over the last year at least, SVOL has pretty much had all the good parts of super high yielding stocks or ETFs and hasn't really shown many of the bad parts. So SVOL moving forward will be at least a small portion in my overall portfolio, and make sure to stay tuned because I'll keep you guys updated if I decide to buy a large amount. But I want to hear from you guys down below when it comes to the SVOL ETF. Is this a fund that you would add to your portfolio? And is this a fund that you trust moving forward? If you enjoyed this video, make sure to please drop a like in the video and subscribe for more content like this in the future. Thanks for stopping by, guys, and I'll see you in the next one.